Hi there, welcome to our second bulletin for this year, and in fact, the second one for the week. What we do in these bulletins is cover the major news and also look at the numbers and the sectors how they performed during the week. Uh, for this week, the primary thing was quarterly results from IT sector. And first, before we get into those, let's look at the numbers. Now, Nifty had a good run up in this week. It gave a 1.77 uptick and it closed at 21,894. From a volatility perspective, also it was a fairly well positioned week. It's almost a positive trend for the entire week with one or two odd dips in between. The lowest being the 21,476 and it almost closed at its peak. So Nifty is trading at an all-time high. And if you look at sector-wise, let me switch over to the Google Sheet wherein we maintain all the details. Now IT did extremely well, and it is also like in a way it reflects that the guidance that these companies have been giving, based upon that whatever analysts are expecting, they're seeing that in results, because most of this gains that happened in IT are coming because of the fact that the results were declared and they were in line with analyst expectations or slightly better. And in a way what it is indicating is also the fact that IT has been not in rally for this entire run up from 17,000 to 21,000, and now it is moving from an undervalued zone to a fair value zone when you compare it with the overall Nifty area wherein it is trading. Nifty is trading approximately at 23.4 P, which is 10% above its average P from the last 15-20 years what we've seen. So now that Nifty is at that level, IT hasn't participated in the rally. We're seeing that it started participating, and also the fact that US Fed rates are expected to be cut in the upcoming months, which means that companies will be able to take more bold decisions and there can be more investments that can flow into this sector. That's why there is a lot of traction in this space now. The realty continued its uptick. Last week also it was up there, and infra, as has been the season, it's continuing to show growth. Energy, auto, metal also participated well in the rally. The pharma and the banking sector didn't do that great. Banking definitely not there, and financial services, FMCG and media were quite muted or slightly slacking. Overall a good week sector wise. Now as I mentioned, what we also did was evaluated all the sector IT companies results. So when we look at Infi, we use the regular process, that's BARD, to query the quarterly results. What we saw was that there was a profit dip, but there was growth areas that it observed. So this is exactly the way it has summarized. What it means is that although there is slight decline in the profit, there is the analyst and the overall the way the company has given guidance and the way it has been able to get new contracts, people are seeing growth, and that is why the results have been received well. And then markets have responded very positively. In case of Wipro, what BARD had to say at a summary level was mixed quarter with cautious outlook. That's exactly true. There's not much change in the profit, from a quarter on quarter perspective, 0.8% decrease and a 9.8% increase year on year. So almost all the IT companies have either a marginal increase in their profits from quarter 2 to quarter 3, because quarter 3 is expected to be muted because no major decisions get taken place in the US, which is the primary market, because that's the holiday season over there. So in case of Wipro also it is like that. And TCS, when we started querying, it was primarily the results were not declared, so it was saying that it's expected to grow and increase the market share. And when the results did come out, it wasn't very different from these expectations. Overall, reasonable growth in the quarterly level, and markets did receive it well. Now to look at very specific numbers, let's switch back to our presentation wherein we've got the major numbers. Now before we get into it, overall the way we look at it, there is still caution in the corporate spending in case of IT services. So that's why it's not, as I mentioned, all these companies showed very marginal improvement in terms of the profitability or the revenue numbers, and even when you compare it with the 22 quarter, that because there is a lot of caution from the clients. Now the second part is that there is inflationary pressure, so not many companies are investing at this point in time, and as I mentioned, December is a time when not many decisions are taken, so no new investments are being made. So that's the overall picture that is emerging at this point in time. HCL Tech definitely had a good quarter. Now from a numbers perspective, TCS revenue was up by 4% year on year, profitability also up by 2%. It announced a dividend of 27 rupees, 18 rupees being the special dividend and 9 rupees being the interim dividend. And the operating margin declined by 0.5% to 24.5%, which is not major, but yes, there is a slight decline over there. And it did resort to the cost optimization method and reduced its workforce by 2,000 employees. Now overall what the management has indicated is that they're well positioned to leverage the investments in the cloud and digital transformation that companies are going through, and that is leading to the long-term demand, and TCS is in a position to take charge of that. And it also acknowledged the fact that there are headwinds in the economic environment, but overall as a company they are very well positioned to take care of it. And what it genuinely emphasized on is that the high margin segments like cloud, over there they've been able to develop their workforce and they will be able to build more on that particular area and bring in contracts which gives them the higher margins. So overall what they have said is that this operating margin decline of 0.5% is a temporary thing, and they will be able to move from a low margin projects to higher margin products in near future, and they feel that they are very strongly positioned. So overall guidance from TCS is definitely positive. The management has not tried cutting on any of their earlier guidance. So that's where the TCS results stand. If you look at Infosys revenue was up 1% year on year, so there's hardly much into it. Profit down by 7%. So, but the key highlight in case of Infy results was the fact that they won this $3.2 billion deal, which resulted in a lot of confidence, and because of that we have seen that stocks has gone up during the week. Now although for that matter there's also a reason that the analysts were expecting this quarter to be weak for Infosys, so there is no surprise from a numbers perspective. Also overall numbers were also received reasonably well, but the highlight was this $3.2 billion deal. Operating margin also fell for Infosys. It was down by 1%. So attrition has been down. So as we are saying that the markets in the employment workforce are not that lucrative right now from employees perspective, so the attrition is dropping. As you can also see that if you go to IIMs and other places, there is not that much of a hiring that is happening in this season, so attrition is down. Now overall guidance from the management is that the digital transformation continues, and that's leading to opportunities for Infosys, and they maintain the same record. Now they do indicate that the niche player competition has increased significantly, but Infosys has deep understanding of certain industries, and primarily when you go to IT services companies, it's not just the fact that whether you know cloud, you know digital, but how much do you know about a particular sector? That's very important, and that's where they are proclaiming that Infosys is better positioned to leverage that. The revenue outlook has been revised, so it's a slightly negative, but Infosys has been known to give a conservative approach, and they have done this very often, and usually it works out in their favor. So it has been revised from 1 to 2.5% to 1.5 to 2%. The operating margin they plan to maintain at the same level. So that was the overall Infosys results. The key areas, as I indicated, digital transformation, cloud, and automation are the key areas in which they are expected to grow. Now, from Wipro perspective, revenue was down by 4.4%. Profit also down by 12%. Dividend is only rupee 1. Operating margin expanded 0.6% year on year to 16%. So it moved up from 15.4 to 16%. And they also took fairly stringent cost optimization methods by reducing the workforce by 4,473. Overall guidance is not so positive from the management for Wipro. It indicated that the revenue growth will remain flat, or it would be there in this single digit for that matter. They will continue to invest in digital solutions like cloud, automation, AI to drive future growth. And overall revenue guidance is fairly conservative. So not a very good guidance from Wipro in terms of it's a very conservative one. Infosys also has maintained a very conservative guidance. But good results based upon what market was expecting, and I think it's their guidance is overall ensuring that the market doesn't expect fireworks and the next quarter is received well. So with that, we wrap up the part wherein we summarize the IT results. They're definitely in line with the expectations of the market, and Infi gained significantly after its results. I'll see you in the next one. Hopefully this week we'll see a good run up of Nifty again. Stay invested and invest with confidence using numbers. Bye for now.